Well, folks, this is a nightmare for short sellers coming true here. A lot to take you through in today's video, a lot of important things to show everybody watching this video right now. We have short sellers now deleting their social medias, which is extraordinary. And, it's kind of sad because it just shows me how weak we are mentally now as a society, that we have individuals that, can't even take the heat. And we saw this last year in the bear cycle where a lot of bulls just deleted their social media accounts. They left platforms. They stopped posting and things like that, right? In terms of the bull side. And now we're seeing bears do the same exact thing. And their nightmare is kind of coming true here, right? And these folks are leaving social medias, and it's just like, my gosh, man, we are so soft nowadays. We are so soft, right? It's like you really need to delete your whole profile just because things aren't quite working your way. It's just like, all I think about sometimes, I think about especially in the United States, what our country was built on and how strong men were back then, right? In the wars they had to fight, in the dangerous situations they had to be in, and just the extraordinary strength those folks had, right? And today we're in a time period where the folks are so soft, oh, I am deleting everything, deleting my whole everything, it never existed. And it's like, come on, man, holy smokes, I got wrecked last year, right? Last year was a horrible year for me up until the very end of the year, right? Horrible year. I kept posting, stayed out here, kept my face out here, and it is what it is. It's just anyways, man, it's just a very soft society we live in nowadays, and it's quite sad nonetheless, right? But these bears are freaking out now at this point in time. They're getting absolutely obliterated because they went all in on put options on this market in November and December, and I'm going to show you that data in today's video. It's going to blow your mind. These folks are losing their entire portfolios now, and the thing is this is almost comical because the Nasdaq's down 25% from the highs. Over 25%. So you got bears losing their entire portfolios. You got these folks freaking out with a NASDAQ down 25% from highs. What are they going to be saying when the NASDAQ's back at all-time highs? And that will eventually happen. Oh, gosh, okay. Man, we're in quite a situation. So hope you guys enjoyed today's video. Got a lot to take you through. I've got a lot of things to show you, a lot of stocks to talk about, a lot of things in the market to talk about. I appreciate everybody that's joining me and subscribe to the channel. And also support everybody that supports on Patreon. I appreciate each and every one of you. It's $2.50 a week. It is a no-brainer to be in there, see exactly the stocks I'm buying in there, and also get to see exactly how I build a portfolio from scratch. And we're about to hit 500 members in the Patreon. We've got one of the fastest growing Patreons in the world right now. I appreciate everybody. And I just posted the moves 2 hours ago that I made in there. I bought 5 stocks here today. 1 is a growth stock, 2 are value stocks, and 2 are dividend paying cash flow companies. So if you want to see that, that will be pinned comment down there. Alrighty, guys, first up here, let's talk about this one, Meta, right? So obviously, the shorts are freaking out. The put option gang is freaking out. This is a 3-month of Meta. A 3-month of Meta, okay? The stock has climbed 108%. Now, the bears will look at that and they say, that's ridiculous. No way that stock should be up 108%. It's going to go up a whole lot more, baby, okay? This is just the start for Meta. Meta's about to go on a multi-year run, okay? And sure, we'll have dips from time to time for a few weeks or a few months, but at the end of the day, this is on the next multi-year cycle for Meta now at this point in time. The valuation is down considerably. Zuckerberg, listen to the conference call, bears, okay? Listen to the conference call. This is very important. WhatsApp continues to take off. Facebook continues to get bigger. Instagram continues to get bigger, all simultaneously, while they are so focused on efficiency and keeping costs down. Zuckerberg said it like a million times in that conference call. He is going to keep costs down in this company for the next, let's call it as far as the eye can see. And they're going to build a much more efficient organization now, which means profitability is going to take off through the roof over the next few years. Watch how their net income climbs in 2023. Watch how their net income climbs in 2024. Watch how their net income climbs in 2025. It's going to be a fun show to watch, okay? So this show is just getting started. We're just at the appetizer phase for Meta right now, okay? This is a little move, okay? Wait to see the next move for this baby. We're at appetizer phase, okay? I'm now up in the public account $116,000 on Meta. I'm not selling that stock anytime soon. This could double tomorrow. Like in terms of my gains, it could be a $232,000 gain. I wouldn't even consider selling Meta. And matter of fact, I'd still be buying Meta. Like Meta is still a buy here. And so this is an issue. Like longs, we're not even going to consider selling the stock anytime soon. And we're going to keep buying, and we're not going to stop buying this one because it's easy money still at this point in time. Until it goes over 250, I can't even consider stopping buying Meta overall, right? Like it's just still a steal deal from here. You look at a stock like Shopify, right? Just since mid-October, this stock has climbed 100% since mid-October. And this was a stock I took advantage of, and I actually bought this stock in my Ally account. And I've done pretty darn well with the position in a very short amount of time, right? Already up 87%. But with a stock like Shopify, you got to understand a company like this is set to be the next multi-$100 billion. This is set to be like the next big tech company. Let's just put it that way. The next multi-$100 billion, if not a $1 trillion company someday, right? They're set up in a perfect position to do that. And so when you look at a stock like Shopify, you got to understand, like, if you were trying to bet against a stock, which a lot of folks were doing throughout the summer and whatnot, summer of 2022, it's not that type of stock. Like if you wanted to short this stock or buy puts back in let's call it mid 2021, late 2021, when we were kind of at the end of that, let's blow off the top phase, fair play back then, right? But now, no, okay, not at this point in time, because this company has so much growth runway over this next 5 to 10 years. It's ridiculous. You don't get in the way of a stock like Shopify. It is an absolute, it's going to be nasty. That's all I'll say about that. It will be nasty, right? Tesla, my Esla. This stock in the past 1 month, I pulled up a 1 month chart of Tesla, is now up over 70%. 70%. Now, the shorts, they love to pile in against the stock time and time again. And they love to try to slay this dragon. And it's not worth it. It's not worth it. There's plenty of other stocks you can do that with. Not Tesla, okay? These folks, they try to do this again and again and again. And it's literal insanity. It's literal insanity, right? What's the definition of insanity? What it is, like doing the same thing over and over and expecting different result. Isn't that what they say, right? And that's what these short sellers do. They try their hand again and again and again to lose again and again and again and again and again. And it cracks me up because it's just not worth it, man. It's not worth betting against Elon Musk. It's not worth betting against Tesla. These folks, they try to do it, and it's like I said, in Jim Chano's video, a reaction video I did a while back, this is all about ego for these folks. It's not even about money. It's about ego. They want to be the one that got it right. And I shorted Tesla, and I got it right, and I slayed the dragon that is Elon Musk. It's an ego play. And in the stock market, if we know one thing, it's that when you start worrying about your ego more than you worry about money, you lose money. Okay? Every single time. When you start worrying more about your ego than money, you lose money. Okay? And so for these short sellers, it's not a practical short. It's not the type of stock you should be shorting. It's just bottom line and buying puts on. There's a ton of other opportunities in this market, right? Ton of other opportunities. A stock like Tesla, you don't get in the way of a company that has a multi-decade growth opportunity in front of itself, that's a category leader in a massive growing market, and has one of the best teams you'll possibly find for engineers and talent. You don't get in the way of a stock like that. But these folks, they like to tempt fate again and again and again, and they get the same result slapped in their face again and again and again, right? And I've been in this stock for years, right? We're sitting on a 705% gain on this stock, which will likely be a whole lot bigger gain in the future, right? And the thing I've learned with Tesla over time is this is one of those stocks that you just, as a long, you're going to have these huge volatile moves up and down, right? And if the stock gets really, really cheap, you buy a bunch of shares, you throw it in the filing cabinet, and the rest is going to be what the rest is going to be. These bears are going to try to get you to sell out. They get these short positions on. They got these put option positions. The only way they can make money is by trying to get longs to panic out of these shares and sell them. Right? That's the only way. And it's a losing proposition, but they try and they try again, and they'll go on to media and say, why Tesla's so bad and blah, blah, blah. And all to lose again and again and again, right? You look at a stock like Netflix. I've never been the biggest fan of Netflix, right? Never. But at the end of the day, this stock got down to stupid valuations, right? Over the summertime. And just since the summer, this stock's climbed 115%. Now, this stock got down to such low valuations that I had to buy Netflix. Okay? Me. That's how cheap the stock got. So I went ahead and bought shares. I bought it at $181.43, right? I just bought 50 shares. But I even, like, you know how cheap Netflix has to get for me to buy? I'm not even like a fan of the company. But I do recognize that the stock was disgustingly undervalued at $181. And I bought. Now, my mistake I made in regards to Netflix is this. Let me show you this here, okay? I sold all my shares way too soon. I sold September 2nd, and then I sold September 16th, when the stock was like, probably like mid 240, something like that, 240, 250, somewhere in there roughly, right? And so I sold those shares way too soon. I should have just held them. Today's Netflix is what, 365 or so? I should have just held all those Netflix shares, okay? Amazon is looking juicy. And this is a stock I'm looking to definitely pick up shares of quite considerably over this next, let's call it few months, okay? They were down another 8% here today. This stock's juicy, okay? Let me tell you what happened on the conference call. The conference call, they went into and dove into how there's so many things that were working against this company's profitability and net income this year, okay? From the Rivian write-down, because Rivian stock price went down a ton, so that took a huge hit to net income, to obviously layoffs, and there's huge one-time costs with all those layoffs you do for a company like this, right? Obviously, all the inflationary pressures hit Amazon this year, just like it hit all other companies. Plus, you had a pullback on AWS for company spending and trying to save as much money as possible, right? And scaling down some of their spend with AWS. I mean, literally the perfect storm working against this company. You're not going to get perfect storms working against this company anymore. And so what you're going to see, regardless of how the economy does in 2023, what I'm expecting actually is Amazon's net income is going to go up epically in 2023, regardless of the economy, okay? Regardless. And then as we build back the economy stronger, right, businesses get back more comfortable with spending again, and we get it back into growth mode and out of scarcity mode, wait to see how Amazon's net income increases. It's going to be rapid. And what I'm looking for from Amazon is I actually expect this company to grow their net income at a substantially greater rate than they're growing their revenue, okay? Which is something I love in companies. And this is something we're going to see actually play out for a lot of these big tech companies. They're going to grow their net incomes at a much more rapid clip than their revenues, which is a different situation in the last few years for a lot of these companies, where a lot of these companies over the past few years were actually growing revenue at a much faster clip than net income because they were spending so much on employees and a bunch of other various things. Whereas now we're going to start to see a shift in 2023 where that net income, the profitability, the E part of the PE, right, the earnings, is going to grow much more substantially than the revenues. And also think about this, right? A lot of these companies have cut employees. That's less stock-based compensation, less dilution. Oh, also think about this. Many of these companies have massive buybacks on, so they're going to be taken off shares. So think about this. Net income is going to increase rapidly for many of these companies, including Amazon. And many of these big tech companies are going to buy back shares, which means there's going to be less shares outstanding and less stock-based compensation than there were previously over the past few years. What do you think is going to happen to EPS? What do you think is going to happen to PE ratios? Oh my gosh, okay? It is a perfect storm in this situation. So nonetheless, Amazon's looking real juicy here, okay? This is kind of shocking. And it shows how do I put this nicely? How dumb the market is, okay? I'll put it like that, okay? Look at this. If we go back to October 28th, 2021, this is put to call ratio, okay? Now, usually there should be more people buying calls than puts. Because why? Well, the stock market's fixed to go up over time, okay? So there should always be more people buying call options than put options, right? But this is shocking, because if we go back to the perfect time to be buying put options, it was among the lowest numbers we had seen in the last 5+ years, okay? Among the lowest numbers. This was the ultimate time that people should have been like loading up on put options, and no one was buying put options. There was no interest, okay? Now, look at this. This is insanity, pure insanity. You're talking about put to call ratio going insane during this period. People loading the boat on put options. Now, this was a time period when, at this time, the NASDAQ was down like 35% plus from highs, okay? 35+%. And you had all these greatest companies in the world down 50, 60, 70%. And what did you see? You saw people loading the boat. Absolutely loading the boat on put options, right? All the way into this blow off the top in December of just people loading up on put options, right? And what are we getting on the other side of this? An epic rally now at this point in time, right? Where many of these stocks have climbed 50%, 70%, 100% just since this time period when people were loading the boat on put options. And it just goes to show you like how silly the market is and how much they get it wrong again and again and again and again and again. It never fails, man. It never fails. It never fails. It's incredible, okay? This guy, I've never seen this gentleman on CNBC before, okay? From this NFJ investment group, this John guy, I gotta say, he was talking the most practicality I've heard anybody talk in a while, okay? And I watch a lot of CNBC. Sometimes I'll just have it on my phone because I got Fubo, right? Fubo TV, so I'll sometimes just have it on the app, and I'll just have it on while I'm working and on the computer and on my iPads and stuff like that. Sometimes I'll have it on the big screen. And this John guy was speaking so much common sense. And basically Scott Wachner, the guy that was kind of interviewing him, was making all the bear points, right? In how much stocks have climbed and look at, earnings aren't strong right now and all the issues. He was given the full bear case, okay? All the same stuff all the bears talk about. And this John guy, was talking about, listen, he basically said it like this. He said, if you need a postcard to be written to you to know when to buy stocks, you're doing this game wrong. He said you have to be buying in the time periods when it looks ugly out there. He was 100% right, okay? And I'll take you back to every time period that was a great buying opportunity. I'll take you back to 2009, 2010. An extraordinary buying opportunity in the market. It was not easy to be a buyer there then. I was a buyer then, okay? I can tell you the economy was horrible, awful. Like for people that didn't go through that economy, you have no clue how bad it was. It was awful in 2009 and 2010, okay? You had to be a buyer of stocks, and if you did, you were doing tremendous, okay? If I take you back to March, April, May of 2020, horrible time to, environment, right? Everybody was losing their jobs. You had obviously the government shutting things down. It was ugly, right? It was a great time to be buying stocks. If I take you back to, 2001, 2002, after the tech bubble went boom, I mean, it was a lot of negativity around stocks, obviously, because people had just been obliterated. NASDAQ went down an extraordinary percentage. The S&P 500, right? You had just an overall super negative sentiment around the stock market because so many people had been hurt so bad. Guess what? It was an extraordinary time to be buying stocks in 2001, 2002. And some of the, if you were buying Amazon stock, oh my gosh, did you make some money? Apple stock, like any of those stocks, like you did tremendous. But no one wanted a piece of those because it was ugly, right? And so earnings had fallen off a cliff for those companies. A lot of them might have been losing money. Revenues weren't in a good place. There was overall horrible sentiment. But at the end of the day, it was the time to be buying. And I could take you through every single time period in the past. There's never a time period when it all looks great and that's the time to buy. That's the thing people mistake in the market. They think, it's going to be some perfect scenario where stock prices are going to be super low. Earnings are going to be climbing epically. The economy is going to be getting in a great position, and yet stocks are going to somehow be at some like all-time low or something like that. Doesn't work that way, okay? By the time the economy is great, earnings are great, you're likely sitting on a stock market that's at all-time highs. All-time highs, okay? And that will be the same exact situation. And so everybody waits for this, like, there's got to be some all clear. No, as crazy as it sounds, you have to be a buyer in the time periods when it's ugly, when things don't look good, when earnings are getting hit, when companies are talking about on their conference call, like every company's been talking about for the last 2 quarters, we're really concerned about the macroeconomic landscape. We don't know where things are going. It's a very uncertain time. When you hear CEOs like talking like that's the biggest buy signal you can ever get in the market. Because you're already at a peak where the market's like they're already priced in that scenario. The market gets ahead of that, okay? And so that John guy, give him respect because he was speaking my language, man. He was speaking my language, and I loved what he said. He said, if you need a postcard written to you to know when to buy stocks, this game's not for you, okay? Hope you guys enjoyed today's video. As always, I appreciate everybody. If you're looking to get access to see the stocks I'm buying and also support the channel, it's $2.50 a week. It is a no-brainer. You have to join us in there, and we're about to hit 500 Patreon members. It's one of the fastest growing Patreons out there. If you're looking to apply to join my private wealth group, my private stock group, and get access to all of that, that will be linked in the description area. And that's more for higher net worth folks and folks that have more money to invest in things like that. Appreciate y'all. Much love and have a great day.